justify our segment, we are having Mallanna Sasalu. He is the CEO South for Puravankara. A very, very good afternoon to you, sir. And of course, the numbers were there on the mixed side of it. But I would like to ask the first question is your expansion plans, especially in Mumbai. That is something which the street wants to know. The first and foremost, the question, what redevelopment potentials are there? What are the important timelines which you will be looking at? Could you share with us?
Thank you, Sharon, and thank you, Anushi, for having me here. So you started off with Mumbai, so let's go to Mumbai then. So Mumbai, that we've got now 5 redevelopment schemes, with a GDA of in excess of 10,000 crore rupees. We've signed up some marquee projects, and some of the marquee projects including, Palm Hills and Miami and Breach Candy and Malabar Hills and in Andheri, Lokhandwala. So we're quite kicked up about that, and so all these projects usually take some 3 to 4 years for us to look at the larger part of the revenue. Yes, in maybe the next 1 year or so, that we should have major launches coming out of this redevelopment, because most of the projects have gone into approval stage. So we are quite positive about the outcome.
Right, sir. So just want to speak about the key launches that you've mentioned. You have about 13 million square feet of launches which are on table for the next 3 quarters or so. Want to understand the overall development potential of these launches that we are looking at, and considering that, what is the kind of pre-sales growth also expected? Because if we see the first half, majority of it was driven by sustenance sales. So is now fresh launches going to drive the momentum forward for the business?
Absolutely. So basically, we have 11 projects coming out of South and 2 projects for launches in Mumbai, right? So out of the 11 projects in the South, 9 projects are coming from Bangalore, and 2 out of the 2, 1 from Cochin and 1 from Coimbatore. The total value of those launches is around 13,000 crore rupees. And usually, when you talk about, the sales projection, we usually don't peg it to a number, but I can say that our experience in the South has been 30% to 40% we sell off on launches itself. So you can do the calculation, considering that our average price realization per square feet is around 8,800 to 9,000 rupees. So with regards to the West, and I think we'll bring around 5,000 crore rupees worth of to the market, and maybe that the launches will be around 2,000 crore rupees will be brought to to the market as per our program currently.
That's pretty interesting, and a bullish view coming in for the Western markets as well. But coming back to the earnings, that's what the street will be looking at. Of course, that's a very short-term scope to look at. But the Q2 numbers, the H1 numbers, the pre-sales are driven by sustenance sales. There were no fresh new launches, and that's what the company had also stated in the investor presentation as well. Could you just, give us the overall trends in the third quarter and fourth quarter? Will this pre-sales continue by sustenance sales, or some additions will be coming in from the launches as well? I want to know, will this accelerate or not for H2?
23 ongoing projects. On the sustenance, we do somewhere around between 1,200 to 1,300 crore rupees of business, and I don't see any reason why it should slow down. It should only improve as I see forward. And as you rightly pointed out, that we didn't have any major launches except for around 1,000 crore rupees of launches, which were the extension of the phases that we had, right? So what we are looking at currently is all fresh new launches, and in excess of around 15,000 crore rupees, including all regions. And I see this as a very, very positive thing for us going forward in the third and the fourth quarter. So third quarter could be 30% of the projects may come up in third quarter, and in the fourth quarter, majority of them comes up, and maybe some of them may even go to the first quarter of next year. So out of the 15,000 crores, even if we're able to get 70% of that, we will be around 10,000 crore rupees of launches that we are looking at in this financial year.
Can you also talk about the growth number that we can have? Because in FY25, we did see about a 15% of a dip. Of course, this was on a higher base of FY24 as well. There were a couple of regulatory headwinds as well. Are these bottlenecks now behind? What's the kind of growth number, if you just have to see, for pre-sales and collections that you have in mind for Puravankara?
See, we are currently, if you what I suggest is that we should look at from our expense perspective. We're almost spending around 150 crore rupees per quarter on our overheads and marketing. What it really means is that the growth is robust. That is, the launches are kicking in, and hence we are spending quite a bit of money. We're also spending 1,000 crore rupees so far in H1 only on pure construction, which means that our collections are stronger, as you can see, by 1,900 crore rupees of collection. 1,900 plus crore rupees of collection is what we have done so far. And in fact, that we think that in the second half of the year, our construction will be even more stronger, and maybe our collection will also be stronger. So with the launches coming in, and we don't see any problem in that situation.
That's pretty interesting. Mr. Sasalu, the question is for the net cash flows also. I'll just break it down for our viewers also. Net cash flows in the last 2 fiscal years have been muted, but you have overall estimated a surplus across all categories. Now, this is exceeding the 15,000 crore mark. When will the recoveries start coming in? Of course, you have mentioned that fourth quarter will be very heavy when it comes to the booking realization. So will that realization come in fourth quarter and the cash flows improve? What would be your answer on that?
See, our EBITDA margins remain at around 30%, or quarter, if you look at it now, that you're seeing around 18 to 20% by the end of the year. I'm pretty sure that with the launches coming in, we will be at around closer to 30% in terms of our margins. Margins have never been a problem. The problem has always been on the supply side because of the regulatory issues that comes up, and particularly our stronger market is Bangalore. In Bangalore, for good in the long term, that we have gone into the computerization of all land records and the approval process and the ownership, such as Khata and things like that, which has put us a little bit back in the back seat in the last 6 months. But once this almost everything is sorted out now, I expect that we are going to be doing extremely well in the third and the fourth quarter, and cash flows are not a problem.
Just a follow-up on that, are these regulatory headwinds that you spoke about in terms of e-Khata and all of these, is this behind now, or can we see a subsequent recovery from now onwards?
Absolutely. I think we are behind that in 80 to 90%. Still, there are some interdepartmental software upgradation and working together is still happening. But I believe that it should not last more than a month. And after that, I think we should be okay in Bangalore to be going towards registration, handing over. Just to give you the perspective, right? We gave guidance of around 4,300 units to be handed over this year in the south, and we have been able to hand over only 1,300 units so far. So another 3,000 units to be handed over in this year. And in this, almost 2,000 units, the snags have already been corrected as per the customers, and customers have accepted it. But since without the, either the Khata or the OC or registration, we have not been able to recognize these things into our numbers. So I'm quite confident that, this year things are going to be better. And I would really think that you use the word turnaround, and it is a turnaround quarter in the next couple of quarters, yes.
The subsequent turnaround that we are looking at in terms of your cash flows, in terms of the overall the macro picture as well, just want to understand how would the overall debt also shape up? We currently have a net debt position of around 2,800 crores or so, which implies a ratio of around 1.7 times as well. So with more of these recognition back on the table, would the debt number go down, or would it sustain at these current levels?
I'll give you a little bit of perspective on this one with a portfolio of around 32,000 crore rupees portfolio that we currently carry. Our debt is around 2,800 crores, which is rightly pointed out. And out of which 700 crore rupees is on the commercial asset, which the asset is almost built and now we are in the process of leasing. And 2,100 crore rupees is the debt that what we have on our residential business. Looking at the size of portfolio and looking at the debt, and I think I'm quite comfortable with the debt position that what we are. Yes, from a very business metrics, the way market looks at it, it may look very high. From a very operational perspective, and I'm very, very comfortable with it. Just to give you a perspective on, for example, 11 projects that are going to be launched in Bangalore, right? And so we've got around 9 of them are owned by us. Right, in South India, we have 11 projects launched. 9 are owned by us. So you can always have different methodology to kind of do your business. Either you own the land parcels and you go to the market, or you can go on joint development. So we're owning quite a number of them, and so the debt position is there, and we're quite comfortable with it.
Interesting, Mr. Sasalu, but pricing trends, that is something which everybody wants to hear, be it investors, viewers, and even real estate brokers. What's the overall outlook looking like for Mumbai and Pune if you compare that with South market? I presume Southern market, there is a slight inch up of prices happening, while Mumbai markets, they still see a bit stagnancy. What are your channel checks suggesting when it comes to the pricing trends?
And then see that the inflation in the country is around 6.5%, and the real estate will continue to beat that. And so basically 9 to 9.5% per year going up is not something that unheard of. If you look at the history from 2012 to 2020, we didn't see any increase in the real estate. And now it is becoming better. And with a little bit of that consolidation that has happened where listed players are coming in. And that's the reason why you see the average price realization going up, and I'm not saying that it will continue to go up at 15%, 20%, but beating the inflation is what it is going to be. So far, for particularly in South India, it has been a supply problem rather than a demand problem. Wherever the supply has come up and the offtake is fantastic, and I don't see any kind of slowdown as I sit here and see there is no slowdown.
Thank you very much, Mr. Sasalu, for giving your views on the company's growth trajectory and even the expansion plans, especially in the western region. But let's just recap the entire key takeaways, Anushi. Whatever the 30 minutes we have spoken about, the management has spoken, what are the three important things which are important for our viewers? The major launches in Mumbai, they are coming in 1 year. And that's roughly 15% to 25% if you combine Mumbai, Pune revenues both, right? Okay, the second one, because we can see the second takeaway is that 10,000 crore worth of projects can be launched by the end of FY26. And the fourth quarter, they'll have roughly 70% of these numbers.
And this is after
in.
A muted FY25 that we are seeing.
Exactly. That means there will be up moves expected, when it comes to the operational parameters as well. And the last point, the management key takeaway is that the Bengaluru market's regulatory overhang won't last more than a month. That means 80-90% issues are solved, right?
Right. So, and this is after 6 months of weaker performance. So this is a big positive that we are seeing.
So this is a very major trigger for the company. And I think that's enough for our show at KYC. And stay tuned to NDTV Profit.